Stephen Nolan.
Right, so let's have a look at this financial meltdown that some people are talking about. It's not quite a meltdown yet, though, is it? It's been another volatile day on the world stock markets. Continuing fears about the debt crisis affecting Eurozone countries and the possibility of this economic slowdown in America. The 100 share index in the UK ended the day down 146 points. It's a fall of 2.7%. Now, what's interesting tonight is to get your views on your sentiment, your feeling, your gut instinct. Are you afraid to go out and buy stuff? Your jobs? Are you feeling a lot less confident about your jobs? If you've got savings in the bank, do you have confidence in the bank? So we can round that circle again. David Cameron, Nick Clegg, George Osborne, they're all away on holiday as we speak, and Labour are getting some capital out of this. Have a listen to Angela Eagle.
This isn't really a crisis about profligacy in small countries. It's a crisis about growth in the developed economies. And I think that what we need is leadership from our politicians. I don't begrudge anyone a holiday, but it is extraordinary that both the Prime Minister, the Deputy Prime Minister and the Chancellor are all away on holiday at the same time.
Would you think they should have just not gone on holiday?
Well, I think they should have ensured that there was somebody that had the economy at the top of their job description, actually on duty at all times through the summer. The global credit crunch actually began 4 years ago today when there were problems at BNP Paribas.
This,
so we know that these things can erupt in August. And as you've said, the markets are very skittish. They need to see firm, decisive leadership. I don't think we've seen any of that.
Well, here's the Labour MP, John Mann. John sits on the Treasury Select Committee in the House of Commons. Hello to you, John.
Good evening.
Hello there. It's quite predictable, this, and we've seen it before. The Prime Minister, he's going to go on holiday. Do you really think this is that bad he needs to come back?
Well, one of them needs to be around. I mean, it's a very Edwardian style of government when you've got the three key people all away simultaneously, because events happen. And that's what happened with the banking crisis in the first place. It really started to emerge in August a few years ago, and one of them needs to be at their desk sorting things out and keeping in touch with what's going on. And the danger is that events could move too quickly, and we're caught with our trousers down in the UK, and we suffer more than others and suffer more than we should.
So you would have the leader of the country back, the leader of the Labour Party. What's he doing at the moment then?
Well, if we were running the country, if we didn't have either the Chancellor or the Prime Minister here at this current time, I'd want to know why, and I'd want them back here. You know, whoever's running the country happens to be the coalition with Cameron and Clegg, but one of these key people ought to be back at their desk. And the fact that Chancellor and Prime Minister and Deputy Prime Minister are all away at the same time is actually quite problematic, because it demonstrates that they feel they've not got that much control over events. And that's one of the dangers that we're seeing in Italy and Spain, where governments are feeling they're losing control and the markets are responding.
Yeah, but we're not losing control here in the UK, are we?
Well, we don't know. We don't know what's going to happen tomorrow, and that's the problem with this situation. The people weren't talking about Italy 3-4 weeks ago. I sit on the Treasury Committee. People have been talking about Greece. They said, well, perhaps Portugal, Spain. People weren't talking about Italy, and now it's Italy in the middle of it. And they weren't talking about the United States either. The idea that the United States was hitting major crisis was not something that any of the advisors, that any of the experts have been saying. And the fact is that across the Western world, governments of every kind and countries of every kind are hitting huge problems because the banking crisis is rolling on.
So spell out to me then, John, your assessment of where the vulnerability is for the UK economy. What are we looking at here?
We've got, I think, two crucial vulnerabilities. One is that we've lost our manufacturing base. That's not the fault of this government. That goes back for decades. And therefore, we've a problem in selling things to the rest of the world. And that's a fundamental problem that's beginning to catch up with us, that we're not doing enough things to sell to the rest of the world, and that's making us over-reliant on imports, and particularly Chinese imports.
But that's big picture stuff, isn't it? And that's for a wider discussion at a different time. You're saying that the Prime Minister, or indeed the Chancellor, they need to be back here now to tackle this crisis. What needs to happen now to protect the UK economy? What would you do tomorrow?
That was my first, and my second is what I'd be doing now, which is I would be reversing the cuts in jobs going on in the public sector, because this very week in my area there are police officers who are being laid off permanently.
So you're in the big picture stuff again.
No.
Their
spending power is not big picture, it's micro. So what's happening in high streets in areas like mine is that police officers, care workers and others don't have the spending power that they had because they've been made redundant.
Sure.
And what that's doing is it's undermining the private businesses, especially the small retailers who rely on those people. Just this week it's been announced that the prison cells in my police station are going. That's about 20 jobs. It's immediately announced the day after that there'll be court movements and less court business coming through. That's another few jobs. But it's the knock-on effect. Those people buy sandwiches, they buy newspapers, they buy clothes. They are crucial
John, this is
to the high street. And that's the problem.
Sure, but
that's what the government needs to be addressing.
Yeah, but this is a discussion and a disagreement in policy that Labour were having with the Tories before the election. If indeed there is this financial crisis at the moment, and you're saying that the Prime Minister or the Chancellor, they need to be at their desk dealing with it, has Labour got any idea how you would be dealing with it?
Yes, and that is by putting something back into the economy, because the other part of that is we need some quantitative easing by the Bank of England. In other words, more money putting into the economy. Exactly the same thing needed in the United States to keep money flowing, to keep the liquidity flowing, but as well to stop.
So you would interfere. Well, hold on a second. So you would interfere with the independence of the Bank of England?
The liquidity decisions need to be made by the Bank of England, but the government needs to be pressing them to do it.
So I repeat the question, but you see, I'm not trying to give you a hard time here gratuitously, John. I'm trying to allow you the space to show the country what Labour would actually be doing if you were in power. So you can't interfere with the Bank of England.
If we were in power, we'd be in with the Bank of England at the moment, and I'm quite sure that quantitative easing would be coming forward. In other words, putting more liquidity in to stabilise the economy. That's exactly and rightly what they're now going to do in the United States, and that will happen in the next week or two. That's what we should be doing, and if we delay too long on that, hopefully the Bank of England will act without government. But government shouldn't be leaving those things to chance.
And you've seen speculation around the newspapers today, and Downing Street has denied that they're even contemplating it, that there is speculation that the Prime Minister and George Osborne, they might be considering a 45p tax rate. Do you think that the 50p tax rate should be immediately reduced as some type of emergency measure?
No, entirely irrelevant to affecting the economy in the short term. Entirely irrelevant. Those people do not have the kind of spending. It's the ordinary people, the vast majority of people, whose standard of living has gone down by about 5% this year, and who are suffering from high petrol prices on top of that. They're the ones who we need to be encouraging to spend more. That will only happen with confidence, and that means keeping people in jobs.
And are British banks safe to have your savings in if you're a saver at the moment?
No banks are safe, and any politician who says that banks are safe is bluffing. It doesn't look to me like there's going to be an immediate crisis in the banks, but no politician can give that guarantee, and it would be wrong of any politician or any government to do so.
Do you think
banks at the moment are not safe?
Banks in Britain are not safe, is that what you're saying?
Banks across the world, including in Britain, are not safe. We don't know what the knock-ons will be. There's a number of smaller banks across the world in huge problems. But of course, it was Northern Rock, one of the smallest building societies, that triggered a lot of the problems in this country.
So, John, spell out to me, because it's a big statement you're making now. In what way are British banks unsafe?
British banks are in the same dangers as banks across Western Europe and across the United States. And it's a lack of confidence in governments and government's ability to deal with the crisis that's undermining the banks, that means that there could easily be runs on the banks that will create crisis in those banks, and that could happen to any banks, and it could happen at any time. It's a crisis of government at the moment, and the banks need to see and are demanding clear leadership from government, which comes back to your very original point, Stephen. We need either Cameron or Osborne at their desk so the banks can see that someone's in charge.
So, John, if someone has a significant amount of savings in one British bank, what's your advice to them?
If I had a significant amount of money, I wouldn't have it in one bank, I'd have it in a series of places. And I think anyone who these days keeps their money in one place is really playing a hostage to fortune. You know, things should be spread around if you've got money. You know, if you haven't got money, like me and doubtless like you, then you've got to take a risk and hope for the best. And the one bank you've got your money in, you've got to hope that they won't go under or the government can bail them out.
It's really interesting.
But, you know, these are dangerous and unprecedented times that we've got.
Jonathan,
and the banking problems haven't gone away. And the kind of crisis we had 3 years ago, you know, I don't think has reached its zenith yet.
Jonathan Davis is an economist and wealth manager. Hello to you, Jonathan.
Good evening, Stephen.
And Richard Murphy, Director of Tax Research UK. Hello to you, Richard.
Hello, good evening.
This is a senior politician. He's on the Treasury Select Committee, and he's saying in this programme tonight, Richard, let's start with you, that British banks are not safe.
And he's right. He's absolutely right that British banks aren't safe because, I mean, I'm not saying any bank is going to fall over tomorrow, but the reason why, the point that is being made by the Labour Party is also right, that we need to have a senior politician here, is because British banks are not safe at the moment.
Jonathan, do you concur with that?
Of course I do. The whole global banking system, of which British banks is an integral part. I mean, the City of London and Canary Wharf at one point recently was even bigger than Wall Street. We are at the crux of the reckless lending to households, to businesses and to governments, where the banks knew full well that they were never going to get the money back because the lending was reckless in the first place.
This is a slight overreaction, though, isn't there? Because there is no data at the moment to demonstrate that any British banks are unsafe and that there will be a run on the banks here.
Of course they're unsafe. They've got bad debts coming out their ears, but they've got businesses and properties that they haven't repossessed because they're practically half owned or majority owned by the United Kingdom government. And the government, don't tell me there's independence in the banking system. The government has basically told them, don't repossess people because we want to pretend that there's no major problem in the system. There are countries going bust right now. Don't tell me the banking system isn't in Stook.
Richard?
Well, I just think we've heard Corporal Jones say don't panic, and he promptly did so. But let's talk about this calmly. Why are we at risk? The risk is that actually Italy and Spain could default on their debt. The reason why is that neither of them are delivering growth. In particular, they aren't in Spain, where 40% of young people under 25 are unemployed. You can't run an economy like that and repay your debt. You can't run an economy the way George Osborne is and repay your debt. You have to have growth. If Spain and Italy default, owing over £3 trillion, that is more than twice our national income in the UK, British banks own a significant part of that debt. If they can't be paid, our banks become insolvent. Now, that's a very technical term, but I want to explain precisely what it means, Stephen.
But, Richard, and do so in a second, but we don't know the extent of the exposure of British banks to those aforementioned countries. We don't know.
Look, we just had Royal Bank of Scotland write off hundreds of millions with regard to Greece. Greece, Portugal, Ireland together are much smaller in terms of their total debt than Italy. But we're talking about Italy and Spain. The total cost of these could push all British banks into potential insolvency. That means they can't pay their debts, and that would mean that they would have to go to the government to ask for money, or they literally could not put cash in their cash point machines so that when you put your card in it, you won't be able to get money out.
Well,
that is the threat we face, and that's why we need politicians here putting a plan of action in place to deal with that possibility, not certainty. I agree.
And with respect, we need a little bit of perspective here as well before there is panic for anyone listening to this programme tonight. There is a government-backed assurance that the first £85,000 of savings that you have in a bank is guaranteed. Isn't that right? It was put up from 50 grand to 85 grand this year.
Stephen, of course there is, but on the other hand, remember what that would cost us if that really had to be drawn down. It would be enormous. So we have to have a plan to manage this. That's the point I'm saying. Not saying that anybody is going to get there, but without politicians in place who believe they can prevent this, then we're in trouble. And our difficulty is right now we have a government who don't seem to believe they can do anything about it, so they've all gone on holiday washing their hands of responsibility.
Let's hit Rochelle home.
That is facile. It's nothing to do with Nick Clegg and the Tories going on holiday. That's what these Labour supporters want you to believe. That is totally facile. The banks are insolvent, and the reason why they're insolvent is because they have made reckless loans by the trillion to households, businesses and governments who can never pay it back. Look at the United Kingdom. The United Kingdom owes 10 times its annual revenue when you consider the level of debt.
It's completely untrue, Jonathan. Please don't put out misinformation. You let me finish. The level of debts we have is about £800 billion. On top of that, we've got the Private Finance Initiative, and on top of that, we've got state unfunded pension liabilities. And that pales into insignificance to the $100 trillion that the United States has taken on in debt and as liabilities for, and that is the scale of the global banking problem. The banks are technically insolvent. That's the reason why they're not lending. That's why the economy is in stuck.
Richard, you disagree with that?
Let me finish one point.
Well,
you cannot have economic growth with the level of debt that we have.
Richard, I'll let you come back to that in a second. Loads of you want to talk about this tonight. 0500 909 693. Paul's in Bradford. First call of the night. Hello, Paul.
Evening. Wow. Passion for you.
What do you expect from a Nolan show?
No, I've really enjoyed listening from here because it's been engrossing.
Tell me what you think, Paul.
I'm just really, really annoyed that they've all decided to go on holiday at the same time, knowing full well 2 years ago that this was about to happen. You'd have thought that had at least left one of them to say, look, even if naught goes wrong, still somebody there to say, look, we're here, we're trying to sort it. It's a big job. We've really made a right mess of everything, but at least one of us is going to be here, or two of us.
I'll tell you even better than that, Paul. We asked someone from the coalition government to come onto the programme tonight. Nobody. Not one of them available. Nobody. We asked Labour, they're on the programme. We asked anyone from the coalition. Lib Dem.
You make it sound...
Anybody from the Tories? Nobody.
You make it sound as if they could actually do anything. There is nothing they can do.
It's not about what they can do.
Jonathan, calm down, please.
It's nothing about what they can do. We know that it's out of their control, completely out of their control.
I think this
out of their control 10 years ago.
I think this is the point that Alan's about to make, calling us from London tonight. Hello, Alan.
Yeah, hello there. Yeah, I think it's true that, this is a global situation. It's not about if Mr. Clegg was to fly in, then suddenly the markets would pick up. We were told by politicians, and the politicians have stayed, they gave up their holiday in America. They were told that if they didn't raise the debt ceiling, the markets would plummet. They raised the debt ceiling and the markets plummeted. Why? Because the government in America have created more debt to take on in the short term, and yet pushed the spending cuts to 10 years down the road. So obviously, they've actually made the crisis worse. So the markets have reacted accordingly and have gone into a tailspin.
Now, hang on a moment. Can I just correct you there, though? This is Richard speaking. Actually, in the US, the price of debt has fallen dramatically. It's lower than it was because people think that the US economy is under control. Whether it is or not doesn't matter. The markets are not saying...
9% unemployment, then, if it's under control?
They've got problems, but that isn't the cause of this week's crisis. So let's keep that in perspective.
The idea the American economy is under control is completely fatuous.
The reason why...
Hold on, let's give Richard a bit of space. Go on, Richard.
This week's crisis is about the euro. This week's crisis is not about the dollar. The dollar and sterling are both offering just about the lowest historical rates of interest they have done in the UK's case since 1946. In other words, nobody thinks we're, as a country, going to default. The problem here is with regard to other countries inside the euro. The euro was a mistake. What the politicians should be doing, and Ed Balls made this point tonight, and he's right to have made it, is that the UK should be participating in Europe's discussions because we have a duty to make sure that the euro works to save our banks.
What I would like... Hold on 1 second.
You mean we should lend more money? We should borrow more money? Is that what you mean?
Jonathan, 1 second. What I'd like to get my head around tonight, and you professionals can help me, is how something in the likes of Greece and the likes of the other EU countries, how it will actually affect us here in the UK. Now, am I getting this right? And tell me this, Richard and Jonathan. So, if the banks have exposure to debt in the likes of Greece, Spain, wherever, and they have to write down those debts, in other words, they need to write them off, that essentially means they've lost that money and they can't have that money then to lend to us here in the UK for British business and us for home loans. Is that part of the problem?
That's exactly the situation, but why does anyone think that that is so surprising? Because the level of debt is so gargantuan that there comes a point when you can no longer screw the taxpayers, the business people who've got successful businesses, because you run out of people making profits to pay the banking debt.
And the other way, Richard, the other way it strikes me that it might affect us here in the UK is that if we're sitting back and thinking, well, look, this isn't going to affect us. Lots and lots of us have pensions. These pension funds, they invest heavily in the stock market. So as the stock market falls, your pension fund could be losing value. Is that right, Richard? Is that the basics?
Absolutely, that's true. You will be seeing a fall in pension fund values. But let's be clear, what the real crisis is a short-term one that we will have, and you were challenging John Mann on this. Let's ignore that big long-term issue, and let's ignore Jonathan's point, because actually we're in this situation. Let's not get too worried about why we're there. We're in it. So that's a pointless argument he's putting forward. The issue now is, how do we manage it? And actually, one of the things we should be doing is precisely telling the Bank of England to issue new money. We can do that. Oh, Jonathan, please, I'd like to have my say. Everybody agrees that one of the problems will be that we will have a liquidity crisis.
I don't agree to that.
Yeah, okay, you don't, but actually most sensible people do.
Yeah,
and the point about this
people
is
that you call them, they didn't spot the first crash in 2008 in the first place, but people like me knew it was coming.
Jonathan, it appears that you think that everybody's opposed to you, and I think actually people working together calmly and rationally can solve this problem. One way to do that is to issue new money. We have to tell the Bank of England what to do.
What you want is for us to borrow until kingdom come. Well, I've got news for you, mate. There's a limit to how much you can borrow because the banks haven't got the money to lend it. That's why when they go to Greece, Spain, and Italy, and Ireland, and eventually, pretty soon, they're going to come to the United Kingdom and the United States, and they're going to say, do you know what? We're no longer going to lend you 2.5%, 3%. We're going to lend you at 10%.
But again,
we're going to lend you at 20%.
Okay, Jonathan,
and that's when our economy is going to collapse.
Right, Jonathan, let's stop shouting, because it's late at night and I'm getting a headache. It's 10:32. Let's pause for a second. We'll come back straight after the news.